Many of life's failures are people who did not know how close they were to success when they gave up. My friends, we see stocks are up for the day, bonds are up, gold is way down, Bitcoin is up. Let's jump into these charts and see where things are. Now, as we look at the S&P 500, we can see where it went red. There we go. It went red early in the day. I watched it, started to get in, but I'll show you a little trick, a little something I like to do before I jump in with a big trade. I know that the chart was starting to roll over, but well, first off, I'll tell you, do you see where it's red here, down right there? But when I go there, the pane pops up. But it was not heading down like it did over here, where it immediately arced down. Well, it didn't do that here. It didn't arc down, did it? It was just going straight across, which led me to believe that there might be a problem there. So what did I do? I went and checked out both the 30 and the 15-minute charts to see what was going on during the day. And what I, of course, saw was that things had jacked down in the morning and then started creeping up. And in fact, they crept up through the rest of the day. About the time I had a chance to really get into the charts was around 11:45 or so when things started moving up. They had petered out right after the first 45 minutes when the market opened during idiot hour, and then just sort of stabilized and started moving up. That added to my caution from seeing the red horizontal line, not things dripping over, dropping down strong. So I held off. I'm glad I did, because it again was one of those weird STCs where it went from red to green the same day. So I was glad that I had stayed away from it. Ended up for the day up 0.19%. Now, when it comes to where the 2-day is, it's still red on the STC, as is the weekly. So again, we're just sort of seeing things. Have we reached a bottom here? I don't know. Could be an intermediate bottom, could fall back through. But over the last 3 weeks, striking about the same place, not hitting the lower low that we had previously seen. That's where we are on the STC, waiting for things to really drop over or to move up, cross through the 200 exponential moving average line and give us an ability to go long. But right now, we're still in short territory. Now, what did we see happen with the NASDAQ 100? Well, we had that jumping in when the STC went red back on the morning of the 30th. And then things going okay, continuing to move down. Then we had these two dojis. Alert. When you see dojis, they mean what? Lots and lots of indecision. STC still stayed red, and in fact, when this second doji in the morning took over, it even spiked down a little further. Then guess what happened? Things started building up strong. Again, don't really jump into these short charts a lot, but you can see what happened over the course of the day, where things pegged down in the morning, just like with the S&P 500, and then inexorably just started moving up strong. Well, what did that lead us to? That led us, of course, to pull this trade when we hit the loss limit of minus 2.63%. Could you have pulled out earlier? Well, of course you could. You can pull out anytime you're in the red. But again, these two dojis were big warning signs to us. The one that happened on Friday and then the one that happened on Tuesday morning. Those are alerts. Dojis mean that you have the bulls and the bears fighting over things, and neither one is winning, which means lots of indecision. It can go either way. And of course, it went against us. So keep that in mind. Learn from it. That's why I tell you guys, you need to be practice trading each and every single day that you have an opportunity to do so. It doesn't cost you anything. When you think you're getting good, then you can do some fractional trading with a share or less. Fractional trading, of course, means if you have an online broker that'll let you buy just $100 worth of the NASDAQ 100, that is QQQ, or the S&P 500, that is SPY. So again, then it's easy to keep up with your percentage gain and loss, and you get to really enter a trade and really exit a trade and really set a good till canceled sell order, all those kinds of things. Now, of course, in these short positions, we would be jumping into what? PSQ, which is a single short of the NASDAQ 100, or SH, which is the single long. And of course, those are much, much cheaper than their counterpart on the long side. So that is where we are. Again, the success multiplier formula is still minus 14. The 2-day is down and the weekly is down. Let's move on to bonds. Bonds just rocketing up. That is nice to see. They've got a ways to go. You can see we are still way negative on bonds when it comes to being below the 200 EMA. We look at the 2-day chart. We are well below the 200 EMA there. And of course, on the weekly chart, well below the 200 EMA. That's 400 weeks. So again, tough stuff. That's the 400-week exponential moving average. And we are weeks and weeks and weeks down. So bonds have lost a lot, gained 0.79% for the day. What are we waiting for bonds to do? Either cross over this 200 EMA and give us some action on the upside, or fall away and let us short them with something called TBF, Tango Bravo Foxtrot. I'll put that training we have on inverse funds at the end of today's show, so you can see all three of those funds that I'm talking about. We go on to gold, which was way down today, 2.12%. Now, we had a successful trade that ended this last week on gold. We gathered 1.72% in down movement, but DGZ, Delta Golf Zulu, is the inverse, single inverse fund in gold. But the problem you'll see with all of the inverse funds when it comes to gold is they are not liquid. That means the difference between the bid and the ask is extremely high, which means when you jump in, you have to cover the difference between the bid and the ask just to get to zero. Now, we like it when it's a penny or two, not when it's a quarter or a dollar or whatever. So again, not very liquid. About the only thing you can do is puts when it comes to shorting gold. And again, don't discourage that at all. If you've taken our training, would love to see you practice trading puts, or maybe buying one small contract. Again, that's going to be a good bit of money out of your pocket if you don't know what you're doing. So practice trade it. Again, learn how to do it by doing it and not blowing your money, because the market will break you very, very quickly, just like being a bad gambler in Vegas, because that's what you're doing when you don't know what you are doing. So gold pounding down even further today. That's quite beautiful. Look at the 2-day chart. Of course, it is quite negative, and the weekly is quite negative. Now we can see the weekly has a ways to go before crossing over that 200 EMA, but as we saw, the 2-day has already done so. So gold is hurting. I'm waiting for it to recover. I can't wait to buy gold and go long whenever that happens, but it may be a while, my friends. And again, with the markets heading down, you got some deleveraging, people having to cover shorts and such. And of course, again, the dollar is the hegemon. I mean, it just keeps moving forward, kicking the crap out of everybody. And as long as it does that, gold will probably continue to suffer. But at some point, what goes down, particularly when it's a precious metal that has real value, will someday go up. Don't give up. Don't give up on gold. Just keep following it, practice trading it, learn to short it, and then when it turns around and is ready to go, you're ready to go. Let's look lastly at Bitcoin. We're looking at XBTF. This is the Bitcoin, the Van Eck Bitcoin Strategy ETF, an exchange-traded fund. It is a short-term futures ETF. And what do we see Bitcoin doing for the day? Up 5.54%. Again, because of all this sideways sliding, we're not putting much into the STC. You can see how highly inaccurate what is typically an accurate indicator is. It is not. Why? Well, because of this sideways slide. You got to have markets that are moving for things like the MACD to actually work well. And again, don't forget, one of the large components of the STC is the MACD, also stochastics, also figures in there. And we need markets moving for that to happen. We look at what's going on the 2-day. It is still quite negative. We can see it's plumbing lower lows over those prior 2 days. And what about the weekly? We can see where last week it was hitting the most short-term low here lately. So again, just pounding down. Will Bitcoin recover? Probably. How will we know? Because we'll chart it and we'll let you know. And you can practice trade it going back up. So that is it for the day. Hope all of our American friends had a wonderful 4th of July holiday. The rest of you, hope you enjoyed a day off from the markets. We are rested, revived, and ready to move ahead. You have questions, we have answers. Don't hesitate to reach out to us. Let's CW. Almost gave out my personal email. I guess I'm too used to doing that too. CW@chartingwealth.com. We always love to hear from you. God bless. All the best from the whole team at Charting Wealth World Headquarters.